All right, good morning, everybody. Looks like our trade plan from last night is pretty much the same for this morning. So we are looking for kind of like a micro pullback of this lowercase b. So if it stays inside that value, you're just looking for rotations. If it starts building above, then we target the upper tail, so you're retracing that upper tail. If it builds value below, then we extend the lower tail. So if we want to grab like an actual tail extension, if you want to be exact, you can grab that entire upper tail and then bring that down to the lower tail and say, okay, if it wants to be about the same, you want to be somewhere around that like 340 area. So what we're doing instead is we're just targeting the value levels that are basically inside of that tail anyway. So pretty much the same level. But yeah, if you want to be exact, we can mark that out. It would be around that 37 area. So for now, just a micro pullback looking for rotations until we see a value breakout. So if you use the bias of yesterday, you're in more of a lowercase b. If you use the bias of today, it's more of a D shape. Okay, taking a look at NASDAQ, same exact story, lowercase b yesterday, D shape today, so we have that micro pullback looking for rotations until there is a clear value breakout. If you want to be exact with that tail extension, funny enough, it lines up pretty much to the tick to that level we are already targeting anyway, around that 46 area. So around 281, 180, and then around 35, if you want to be exact for that tail extension. If it stays above 806, then you are breaking out and looking for that upper tail, possibly a retrace of Wednesday's value, but we do have a lot of sell pressure into the open. So far the sellers are still doing a good job holding on to basically the trend of yesterday. So nothing really out of the ordinary, pretty standard micro pullback day. A lot of sell pressure so far, right below VWAP, failing VWAP right before the open here. You had a little bit of a bear flag in a VWAP. You would have had to trade about 15 minutes before the open, but that is kind of playing out here. Good morning, everybody. Good morning, Scott, Patriot, Scott W, Banana, Gilbert. Good morning, Luis, Julio, Stream, Lumir, Orion, Morris. Good morning, Larry. Good morning, Mark. Flory, eBay, Abby, Fernando, Future. Good morning, Jay. Good morning, Ray, Scott. Good morning, Anthony. Good morning, Greg. Good morning, Yao. Appreciate you guys being here. Happy Friday, guys. Do we have anything on the calendar for today? We do not really. A little bit of PMI at 9:45 and home sales at 10 o'clock, so very light data. Nothing crazy. How did Intel end up doing? I saw they went up and they came all the way back down. Yeah, so it looks like they came back down from their earnings. They had a little bit of a spike. It was to like, let me see. Yeah, it spiked pretty hard, back to like 114. That was like a 14% gain, and they recovered, the sellers recovered the entire move. Keep it on VWAP here. Retesting VWAP. Morning, Joseph, Hugo, Romo, Lulu. Appreciate you guys being here. Testing VWAP on ES here. Hey, numbers, don't type in all caps. It makes you look like a bot. I usually try to ban people that do that because I always look over, I'm like, oh, that's a bot, and I want to ban you, but you're probably a real person, so. But yeah, my settings for VWAP, I don't really touch the settings. They're pretty much default. The dotted one is the session VWAP. It starts at 6 p.m. Eastern the prior day. And then the solid one, which you can barely even see because it's brand new, it starts at 9:30. So I use both of the VWAPs. But yeah, I get that question a lot. People ask me for settings. I put out a short that said my thoughts on that, saying that you guys should never play with the settings on VWAP. The broker, pretty much everybody, like all the charting systems, they should know what the default VWAP is. So when you use the default VWAP, you should just stick to the default VWAP. It's probably the most used indicator in like all of trading, so you don't want to play with the settings too much. The liquidity is terrible this morning. Look at the liquidity here. Just getting blue order, blue order, blue order. That means it's hitting the level 2. It means our level 1 liquidity right here is pretty bad. News in a minute. I think it's at 9:45. Unless you're talking about something else. 9:45 and 10 a.m. Want a Typhoon, Faraj? Amateur. Failing VWAP yet again. Very similar to yesterday. Very common in a lowercase b. The bear flags in a VWAP are pretty strong during lowercase b's. Failing that 30-minute high here. A little bit of a sweep on that high, which is basically just VWAP. You can see what we're doing today, like I said on the trade plan, big lowercase b, very obvious value. We're just continuing what we were doing yesterday. It doesn't have like its own identity today. You're just doing what we did yesterday. And you can see what I was talking about, like, as you were building that kind of bearish trend to like the lowercase b structure, you just kept hitting VWAP. And they just kept failing. Very common. Same thing with a P shape. P shapes are very common to bounce off VWAP, right? There's a lot of delta on this candle here. You can see that delta explosion from the open. But they are just being absorbed because they cannot get through VWAP. Morning, Matthew, Sebastian, Michael, LDT. Appreciate you guys being here. A little bit of data in 5 minutes. Should be pretty low impact. And then a little bit of data at 10 o'clock as well. Had some beautiful VWAP trades on the pre-market if you guys were trading pre-market. You had a perfect bear flag in the VWAP. Not so perfect, actually. A little bit of a trap. But then you had a really good target to the downside. And then you had damn near perfect bull flag in the VWAP there. Damn near perfect bull flag in the VWAP there. And then you had that bear flag right here around 9:15. So you had like 4 VWAP trades on the pre-market. You had a couple back here, but that's pretty fresh for the session. That's like the brand new session. So I'm not really counting that. But after VWAP was pretty established, you had a bunch of trades there. So very solid. If you guys are trading pre-market, definitely keep an eye on that session VWAP. Starting to get a little weak on the 30-minute. We had that bearish trail with that lowercase b. Tried to push above it, failed. Pushed above it here, and then now we're kind of back below it again. Failing that 1 hour trail. And then every trail above 1 hour, including the daily, we are below. Daily, not red yet. We could actually set an alert on that. One day, let's see. We'll do per bar close. And there we go. Okay, so now when that flips red and closes, it will give us an alert. And then we have our weekly trail back down to 230. So everything below the daily, for the most part, obviously, they're flipping back and forth on the low time frames. But they are turning pretty negative. Not a good sign for our overall trend. Okay, here is the target for that bear flag into VWAP there. A little bit of a choppy one. But it is hitting that prior low. Keep an eye on this higher low here. There is a higher low on Delta, but a lower low on price on NASDAQ. So a bit of a bull div on Delta there. We had our 945 data. Manufacturing 53.8 over 54.4. Services 53.6 over 51.3. So a little bit of a mix there. We do have new home sales at 10 o'clock, so watch out for that. That higher low is giving you some momentum on ES, trying to push through VWAP here. Give me 1 second, I need to check something real quick. All right, there you go. How do you read divergence between ES and NASDAQ? Is ES mostly leading? It depends. It depends on what sector is leading. If it's a very heavy, like, tech day where the tech sectors are pushing you around, which is mostly the case, usually the case, then NASDAQ is typically leading. If it's one of those days where, like, the tech sector is doing one thing, but then the entire rest of the market is doing something else, then NASDAQ is typically not leading. And that's usually what heat maps are for, like stock heat maps. Like if you use a stock heat map like this, you can kind of see what's going on. So today would be one of those days where the tech sector is pretty red, but pretty much everything else is green. Either green or like neutral. Production, funny enough, manufacturing, this used to be more of like a blue chip, like kind of stable sector. It's not that much anymore because it ties almost directly into data center construction. So manufacturing has been more tied to higher volatility chip companies and data center companies. So usually when this is red, this is red. The smaller ones that are not tied to data centers are typically more slow and kind of blue chippy. But the bigger ones are tied to that data center construction. But yeah, finance is doing really good. Pretty much every other sector is doing pretty good. At the end of the day, if the sell-off in the big companies, in the tech companies, is very strong, NASDAQ will lead pretty much anyway. It will go down, like let's say if it goes down very aggressively, they're selling 10, 20% on some of those chip companies, it's probably going to drag the market down. But if they're just down a little bit and then every other sector is green, it's not going to always be leading. That's a nasty sell there. Might be a headline. Is oil reacting? It might be an oil headline. No oil reaction, so it might be a tech headline. I still don't see what's causing that. That does not look like a normal move. And I wouldn't say it's reacting to the data because that's way too late. Where do I get my news from? I built a list of people that I follow on Twitter that are basically all the news services or like independent journalists or just people that provide headlines. And I have like 20 to 30 accounts that I kind of cycle through on there. And I just built a like timeline of them. If you go to my Twitter at the bottom and go to my list, there is a news list. You can follow that list. I don't see any other headlines besides the data headlines, so maybe it was just a late reaction to the PMI data headlines. Because that reaction was at 9:50, the data came out at 9:45. So maybe this was a trap and this was a late reaction. That's a pretty serious trap. That was a really fast move. Typically, when it moves that quickly, it's because there's a headline causing the liquidity to get really bad. I did say earlier the liquidity was really bad already, so I guess they didn't really need a headline to lower that liquidity. It was already bad. Okay, keep an eye on 25 and then back down to 92. And now, obviously, it does look like NASDAQ is leading, and it looks like that was a trap on ES. So they broke VWAP and then instantly trapped it. Really nasty sell on NASDAQ. Next target on that is 281, which is very, very close, like one more push. Well, the problem with that bet is if you think like that, you could say that about like everything. That's why I try to rely on like actual information that is provided, like headlines and data and stuff like that. But if you think like, oh, it could be an insider trade or it could be this, that, you're just speculating at that point and you don't really have like the actual data to back that. It doesn't make you wrong, it just makes it hard because you could say that about everything. On the afternoon profile chart, typically a 5 minute. I think 5 minute looks best on that one. So typically a 5 minute. Sometimes I'll look at the 30, but because I'm not using the extended hours on this chart, the 30 is a little too small. So I would say like a 5 minute. Yeah, exactly. It's just one of those things, like I said, like you can say that because you have like, you've seen it before, but you always have to trust everything that you say in trading. Like when you say something like that, is it trustworthy enough to like build a system around it and like actually rely on that and trade on it? Probably not, because it's not concrete. You're just speculating. Um, but if I can tie something to like a headline, that's an actual concrete thing. You always want to tie as much of your trading as possible to something that is concrete, logical, mechanical, all that stuff, right? You take the emotions out of it, you take the bias out of it, you take the speculation out of it. Like, obviously, we're doing a little bit of speculation, that's kind of our job. But I'm talking about the speculation when it comes to stuff like that. Like, oh, maybe this person is closing their trade. Maybe this person's opening their trade. Maybe it's a insider trading thing. Like all that stuff where it's like a maybe, where you don't really know. You got to take a lot of that out. That's why people always ask me like, "Oh, do you think that was like a like when they talk about block trades or something? Like, do you think that was somebody opening their trade or closing their trade?" And I say, I don't really care, right? I don't care if they're opening or closing because I don't really have the data to 100% without a doubt say either way. So I don't care. I look at it more so, are they grabbing liquidity or are they aggressive? Are they being trapped? Like things that I can like quantify. I don't care whether or not they're opening or closing. Yeah, 9:30 to 12 and then 12 to 4:30 or 12 to the close basically. Yep. Okay, you have a very fast bear flag in the VWAP there. You tapped that VWAP like to the tick and then sold it. Staying below that 24 EMA here. Want to bomb? No problem, Anthony. That's why I'd only trade the initial balance to avoid most of the traps. Oh yeah, you mean like you wait until the initial balance? We're just doing pretty much the same thing we did like late yesterday, where we had that kind of constant chop towards the VWAPs, kind of fighting over these lower nodes. You're still clearly seeing a bearish bias, but the buyers are trying really hard to protect these lows. So you have a lot of fight back as you're pushing down. Keep an eye on that session VWAP at 49 here. This would probably be a bad variation because the delta is so high. It's actually like high of day. Or at least high of the open. Okay, so like we always say with bad variations of VWAP, that typically means they can break VWAP very easily. You have to look for more of those trap patterns like we're currently seeing than like an actual failure of VWAP. So it's trying to trap VWAP here, but yet again, the problem is the delta. The delta is still pretty bullish. So they are respecting those EMAs. We're on that 5-minute trail as well. I said, is there a gap around the 5th of May? I can take a quick look. Let me see. The 5th of May. You're looking way far down. No, there's probably a daily gap, but there's not an actual gap. That was just the pre-market running. So it's not an actual gap. It's just a an opening gap. We're bouncing very close to that 281 target, but bouncing a little bit early. Still protecting that value low of yesterday as well. So very standard micro pullback chop here. You're just stuck inside the value of yesterday, so you're chopping back and forth. Like I said, the day does not really have independence. It is just doing what yesterday did. What a Mauser? No, you could say it counts as a gap. It just depends on what type of gaps you want to trade. Like that is just a market, that's like a normal gap. You see those like damn near every single day. Still trapping VWAP here. A true gap on like ES or NASDAQ, like the indexes, that takes a lot more than just like a normal gap that you get from the close and open not being the same, right? Because you have to have the gap when the session is opening, not just from the overnight. We're past the days where you can just like look at SPY gaps and NASDAQ gaps, right? Because the market is like damn near 24/7 now, and it has been 24/7 for a long time, but nowadays we're actually getting so much volume on the pre-market, on the post-market, on the Asian hours, London hours, just every time of day. We're getting so much action, so much volume. It is truly like almost a 24/7 market now. So you can't just look at SPY gaps and NASDAQ gaps without looking at that data and seeing why they are gapping like that. You need to understand what is causing the gap. And what is causing the gap is all of the pre-market price action that you are seeing every single day. Pretty much everything inside this blue box, right? That's all pre-market price action. And like I said, the pre-market is moving so much nowadays, you're getting a gap like pretty much every single day. So you have to understand what is happening inside of that pre-market to understand what type of gap it is. You just can't have that old school line of thinking anymore where you're just like looking at just the gap and not going in and looking at the actual pre-market hours. I do have a video for how to trade London and Asian session. It's the exact same way you would trade New York hours. Nothing changes. It's not like it's a completely new market. It's the same exact trading. It's just like lower volume, lower liquidity sometimes. A little bit slower. But the patterns are the same. Like I was showing earlier, if you guys were in here, the VWAP trades that we talk about every single day during New York, you guys get some of the cleanest VWAP trades from the entire day if you're trading the Asian and London markets. Like those VWAP trades are like damn near to the tick. They're damn near perfect. And then look at how sloppy our VWAP trades are on New York right now. You're still getting them, but they're very sloppy. So the patterns are still the same, but it's just how much time do you have to wait for the patterns to play out and stuff like that. I said initial balance influence and how to think about that going to later day trades on a Friday. So later in the day, you're looking for like extensions really, which is why I have that indicator on here. Like if you have massive breakouts in the afternoon, you can look for initial balance extensions, which have been extremely wide and far away because our initial balance is so ridiculously wide recently. But that's how you would use it later in the day, is like you see how wide the initial balance is, and if you extend that by 100 or like 200%, where could you target in like the afternoon? It's very similar to like my afternoon breakouts. We talk about that stuff in the afternoon, like with the breakouts and the reversals and stuff. Nearly a perfect bulldog on NASDAQ here. Double bottom, curved back, pops up, puts in a pullback. This is a bad variation, though, because it's hitting VWAP as a bear flag in the VWAP. Good morning, Sam. Yeah, you should have a market profile on NinjaTrader. I'm pretty sure I used it on there for many years. I don't know what the like newest indicator is called, but it should just be called market profile or something. Yeah, that sounds right, Nicholas. Order flow volume profile, and I think you can set that one to like market profile in the settings. Good morning, Tamer. Isn't it rare to see the B session completely engulfs the A session? Yeah, it's not. It's not common. It's not common when the A session is already wide. So we have a wide A session, but the B session took out the high and the low. This is decently common in a micro pullback day like we have today. This goes back to, I just sound like a broken record when I talk about the micro pullbacks and stuff, but I constantly have to remind you guys because I know days like today just completely destroy you guys as traders if you don't understand this. That's why I have so many videos on this. I have so many shorts on this because it's a massive topic with the D-shaped days and the micro pullbacks and the rotations and just all that shit, right? But the biggest thing you guys have to understand is when you close a day like this and you have that B-shaped profile, or if you flip it and you have that P-shaped profile, you really need to understand that the next day has a very high likelihood of doing what we are doing right now, where we have that D-shaped kind of choppy, balanced day, where you have that D-shaped profile and you're just overlapping that volume, that value area from the lowercase b, from the capital P. Like I said earlier, you do not have independence today. Today is not doing its own thing. It is just continuing what we did the second half of yesterday. You are building up that POC. You are building up that value area. So once again, you don't have independence. You're just continuing whatever that chop was the prior day. So you don't want to be looking for these massive like one directional moves and you just keep getting chopped out because you're trading around that overlapping POC where it's kind of a 50-50 and the buyers and sellers both agree that it's a good price. You're trying to be 80-20, 70-30. You're trying to be very one-directional. The market is not very one-directional. It is two-directional, right? It's 50-50. So you need to stop trading around that overlapping POC and look for more of those rotations around the overlapping value highs and overlapping value lows. And then when you build outside of that, then you can be more 80-20, 70-30, and you can look for those major breakouts. But inside of that overlap, after a lowercase b, after a capital P, it is much more likely to be a D shape, be a micro pullback, and just chop you into oblivion, right? And that's why I write my trade plans the way that I do. If you guys read the trade plan from today, it is exactly what I just said. It is a D-shaped neutral day. And if we build above X level, then we're more one-directional. If we build below X level, we're more one-directional. But inside of those levels, we are not one-directional. And you guys who keep trying to take these like big one-directional trades, you're getting extremely frustrated and you're losing your trades because you don't understand that. You have to understand when a day is more one-directional and when a day is more two-directional, and you're just getting completely chopped. And that's going to be turned into another short about micro pullbacks. If you haven't seen all my other shorts about micro pullbacks or D-shaped days, now is probably a good time to check them out after being chopped out today, right? It's a big thing that newer traders and just traders that are struggling don't understand is when the market is like very one directional yesterday, it doesn't mean that we have to keep doing that over and over again. Like if you're one directional on Monday and it goes insanely hard on one side, it doesn't mean Tuesday, Wednesday, Thursday are all going to do that same exact thing. They try to follow this like FOMO mentality or this like momentum that happened on a prior day, but that's not what the current day is telling you, right? The current day is telling you that it's like the complete opposite. Yeah, the crypto mentality, exactly, Austin. That's a really good way to put it. The crypto mentality, the GameStop mentality, the AMC, like all those mass. Now you could say like all the chip companies, same mentality on all the chip companies. That is like a once in a decade or once in a few years event where these things just don't stop and they just go absolutely crazy. That's not something you should be looking for every single day. Trading is about being consistent, doing something that you can consistently do every day, every week, every month. Not looking for these once in a lifetime, once in a generation moves, right? Kevin, I don't care what SpaceX is doing indicator wise. I don't care if it's on the 50. I don't care if it's on the 8. I don't care what the volume profile looks like. I don't give a shit what the VWAPs look like. All I care about on SpaceX is the one thing we talked about when it IPO'd. It is doing the IPO pattern. It's doing it damn near perfectly. And I'm just going to wait for this pattern to continue to play out. And the pattern is nuking on IPO and then going down 60. It's like the crypto pattern, going down like 60 to 80% from the IPO. That's a little high. Maybe like 40 to 60%, somewhere around there. And then you're accumulating, if you still believe in that company, obviously. Once it's in that accumulation phase, and it kind of comes down and accumulates for a long time, once it starts to show signs where it's failing to rotate, and it's no longer rotating that accumulation, and it's more so one directional, you want to be a buyer when it breaks out of that accumulation. Or if you really believe in the company, you can just accumulate when it's literally accumulating. But if you don't really believe in the company that much and you want to just trade the momentum, you want to be a trader more so when it fails to rotate and it's breaking out of that accumulation. Same pattern we traded on Rivian, same pattern we traded on American Eagle, same pattern we traded on Intel. Rest in peace, Intel. We could have held that one for way longer. Oh, sorry, you didn't say SpaceX? My bad. I'm going into a rant for no reason then. Well, if you guys didn't know the IPO pattern, there you go. I just gave you that. You said SPX. Okay, you're talking about ES. Sorry, it's rare that people actually say SPX. Like, nobody trades SPX nowadays on the retail side. Okay, let me completely reread your question. You said SpaceX is trading around the daily 50. Seems the logic is price is going to be sticky in this zone. Okay, yeah, you're just talking about like the index is trading around their well-known averages. And will they be sticky around those averages? Yes, I agree. Yeah. You probably have a bit of sticky price action around those major averages. Sorry, a little bit of dyslexia there. I thought you said SpaceX. Yeah, Scott. So not to reveal too much that we talk about in like our tutoring sessions, because that's kind of a one-on-one thing. But if you look at today, Scott, look at the 1 minute on the Momo, and we talked about this a lot in our tutoring sessions. We talked about the different playbooks with the Momo when you're in a two-directional market or when you're in a one-directional market. And when you're in a two-directional market, like a D-shaped balance on the Momo, you want to be looking for those shadings. You want to be looking for those divergences for a mean reversion style of a trade. You do not want to be looking at it on more so a one-directional momentum trade. And if you zoom out on the 1 minute, it's doing exactly what we talked about in those sessions. You have that purple shading here, mean reversion. You don't have gold shading here, but look at what you have. You have a bear div here, mean reversion. You have a bear div here, mean reversion. You could even say this is a bear div. Bear div there, mean reversion. So go back to exactly what we talked about those couple of sessions with that, the different types of playbooks. In a more two-directional market, you look for the shadings, you look for the bear divs to be more of a mean reversion, going from one side of the value area to the other. In a more one-directional market, the shadings are not so strong as a mean reversion. They are more so an exhaustion that is just going back into the same trend, pulling back to the EMAs, pulling back to the trails, and then going right back into that trend that it was already in, the one-directional nature of that playbook, right? Yeah, we talk about that every now and then on stream, but for you guys that have not heard me say that, that's a good way to look at the Momo. There are two like different ways to look at it. When you're in more of a D shape, you're looking for more of the meaner versions with the shadings and the bear divs. If you're in more of a one directional market, kind of like how we were yesterday, here's a great example. The shadings are not going to give you a mean reversion. They're not going to give you a reversal. They are more so just showing exhaustion in likely pullback areas to go back into that trend. And the trend was so damn strong yesterday, you didn't even really get those pullbacks. This is more of that fish hook pattern that we talk about, where you're not even looking for that exhaustion. The trend is so damn strong, you can't even break that trend at all. Yeah, like right here is a good example. Very one directional, shading back into the trail, still going down, shading back into the trail, still going down, right? So just different playbooks based on what the style of the day is. Is it very one directional or is it very two directional? That sort of thing. Today is obviously more two directional. Yesterday was more one directional until the end of the day. Yeah, Kevin, no worries. I get that. Yeah, Bob, going into the Fed next week, there's still a there's still a battle between whether we're going to leave rates the same or hike rates. So I think that's scaring a lot of traders. So you're getting a lot of bearish pressure going into that meeting. Typically, when we're this close to the meeting, it is not going to be undecided, but we're still pretty undecided. Yeah, look at this. We are less than a week away from this meeting, and we are still completely undecided. It's only 65-35. Usually this is like 90% when we're less than a week away. That's kind of crazy. It might show that people can't read Warsh as well as they can read PAL, right? My biggest issue is understanding what value area the market wants to trade in. And that's not really just an issue from you, that's just an issue entirely. Like that the market is just confusing in that way. Like when you have a inside day, you don't know whether it's going to respect the inside day or the outside day. It's really hard to tell. You just have to see how it reacts to those levels. You start with the inside levels and then you move to the outside levels. Where do you find Discord? It should be like the second or third link in the description. Whichever one links to my website. Little double bottom here, keep an eye on VWAP. We are still just rotating. I try not to overanalyze these days, guys. That's why I'm not just like constantly throwing shit at you. It's the same thing I constantly talk about. You're watching the value low, you're watching the value high. You're trying not to get chopped out around the overlapping POCs. You're just looking for these rotations. It's literally exactly what I just said earlier about the shading. We're being pushed back into that mean reversion. So here is the trail, and then possibly higher if it can break through VWAP. Yes, these are CVDs, cumulative volume deltas. The line that is on that is a 60 EMA because these are 1 minute charts. That is a 1 hour trend. So it's showing you what the 1 hour trend of delta is. And here you go. So if you guys listen to that rant that I just went into with the Momo, it just gave you a trade right there with exactly what I just said. So you have a bull div on the way down here, and you have the shading causing a mean reversion. Mean reversion has respected the value high of today. We are not really respecting the value levels of yesterday. Even the full session value high is being missed a little bit here. 55 is what it's looking for. Josh, I started around like 2014, 2015, went full time around 2016, 2017. I've been full time for September, actually, will be 10 years. It was around like late in the year 2016. And then I started streaming January 2018, I believe. It was like around New Year's. So nearly a 10-year stream anniversary and coming up on our 10-year full-time anniversary. Good morning, Scooby. Not sure if I saw you earlier. Do I trade the 80% rule from James Dalton? So in a sense, when we talk about value retraces, that is basically his 80% rule, like the newer version of it. But it's not exactly the same. So whenever you hear me talk about value retraces, that's kind of like my method of doing it. Or just like the general method of doing it now. Was I trading on election evening 2016? Probably. I mean, if you asked me what I was doing last week, I couldn't tell you. I couldn't tell you what I was doing 10 years ago. Aura, it's basically the same exact thing. It's like you're looking for value building back inside of an old day's value. Like when the 30-minute candles are retracing back into prior value, you're looking for that full retrace, right? If you start building a node inside of the old value, they want to retrace back into the value high, value low, whatever type of retrace it is. There's a lot of depth to it that I can't just explain in an easy way. You have to watch my videos on value retraces. I believe there's a playbook video on that as well. But yeah, basically you're just looking for newer value, retesting older value. Once it shows that it wants to trade inside that value with some 30-minute candles, delta, whatever it is, then you look for that retrace. Okay, so here's exactly what we talked about. We had the shading, we had the bull div, you had the mean reversion. This is actually getting a lot more than a mean reversion here. It's actually turning into a little bit of a trend. You do have some shading coming in on the upside here, but like I said, this is turning a bit more into a trend move. It's getting a bit more aggressive. You see that break of high of day. So we might be trying to break balance here. We'll keep an eye on that 63 area. We're testing that value high of yesterday. You started out as a small mean reversion, and now we are getting into a lot more momentum here. They are pretty exhausted. They need to find some value above 58, or this probably will turn into another mean reversion. Keep it on that VWAP as well, back to 494. Also, a bad time to push the high. You will have single prints going back to 60 if it stays up here. There are the single prints, and they're pretty much instantly being filled in. Hey, Matthew, have a good weekend, man. We'll see you Monday. Good morning, Olive. We do not see that bearish momentum yet. So like I said, turning more into a trend. Building a node outside of value here at 64. Keep an eye on that VWAP. What do I think about using gamma levels and volume profile? I don't think it's necessary to really overlap them. I feel like they're kind of like doing very similar things, so you don't really need both. It's kind of like overkill. Yeah, these are both my indicators. This top one's the trading suite, the bottom one is the Momo. Here's a good example of exactly what I was just saying. How this move is not really like a mean reversion move, it's more of a breakout. And you can see if I put on my bands here, the market making bands, you can see the entire time we've been like ranging between them back and forth. But this move is not. This move is breaking out of it. So much stronger move there. You do have a top pivot. It's trying to pull you back into value here. You did fill in the single prints. We'll see if that can turn into a mean reversion back down to like 45-ish. You really need help from VWAP here. If the NASDAQ VWAP can push you down, that will be a lot of help. Yeah, D, it's just flavor of the month. That's just how the trading algorithm works. The YouTube trading algorithm, I mean. The YouTube algorithm latches on to like a topic, like when one video does really well, and it will just start pushing all of those videos. So like the flavor of the month right now are gamma levels. I don't know who made a video that like blew up, but somebody must have made a video that did very well, and the YouTube algorithm just kind of latched onto it and started pushing the gamma level stuff. And then people on Twitter and just social media, they start pushing the gamma level stuff. It will die out. It always does. There's always a flavor. So give it another month or so, there will be another topic. It's a big reason why my channel started doing really well a few years ago is the flavor of the month was like volume profile, and I have like some of the most watched videos on volume profile like on YouTube, at least consistently. So then my channel started blowing up a lot. And then order flow became the flavor of the month, and then I also have some of the most watched videos on order flow. It's just whatever it grabs a hold of, and right now it's the gamma stuff. You're seeing that one directional bias here. They're trying to push back down to the trail, but it's already starting to find buyers. Same thing with the 24 here. So if it was still in a mean reversion, it would have sold that a lot easier. And mean reversion is just a fancy way of saying a two-directional market, right? Yeah, D, exactly. That's why I do my channel the way that I do. I do my streams the way that I do, right? I don't feed into the hype. I don't feed into the algorithm that much. Obviously, I got to play the game a little bit, but I don't do the hype, and you can see just in how I title my videos and all that stuff. I don't play the game. I'm here to provide value and information. I'm not here to provide entertainment or hype or any of that bullshit, right? I'm just doing my thing, and you guys are watching, right? I don't try to play the TikTok style game. Okay, once again, you're seeing that that power of the trend, right? The EMAs are still pushing you in a one-directional fashion, not a mean reversion. You tapped that VWAP damn near perfectly. You're getting very impulsive moves today that are like not really seeing headlines. We just had a headline for that most recent move. It was talking about how like Pakistan and Iran are talking about um, speaking and just that whole all that bullshit. But yeah, a lot of these moves, like these just random impulsive moves, you're not tying directly to headlines. Hey, Joseph, that's awesome, man. The first payout always feels great because you finally get to see that it's real money. And you're not just playing around with fake numbers on a screen. Okay, and you're seeing the power of clocking this very early. Like very early on, we clocked this as not a normal mean reversion move. This looked more like a impulsive one directional move. And then look at what happened. You pulled back into the trail, you had that trapping pattern, and now you're exploding off of that high. And it goes back to what I was talking about earlier with having these like two different playbooks. And you have one playbook that is more of a range, more of a back and forth mean reversion style, like a D shape, two directional market. And then you have one that is more impulsive, where you're looking for the traps, the pullbacks, the sweeps, whatever, right? To get into that trend, to to not go against the trend, but to look for those little entries for the trend. And that's exactly what's happening now. So instead of pulling back and then completely reversing, this pullback is just giving you an opportunity to get back into the trend. And you can see the difference in the Momo, right? We had the bear divs and the bull divs giving us the pullbacks, and then rinse and repeat on the other side. But then this one, it's more of an exhaustion, pulling back, but then re-entering the trend. Not reversing the trend, just re-entering the trend. And that's what traps are good for, right? The sellers are getting trapped, the buyers are re-entering the trend. Hey, Jozo, good day, man. Enjoy your weekend. Hey, Abby, have a good weekend. Yeah, English, you as well. Yep, so this is a little bit of a weird one because this you could say is a bear div, but there is a lot of space in between. So this is not exactly a bear div the same way that we talked about earlier. You have to be careful with the bear divs that have, or just divergence in general. If they have a ton of price action in between the highs or the lows. There's also a trap here, so there's like a reason that we're pushing this high. So yes, it's technically losing momentum, but it's not exactly the same bear div trade that you would trade like the ones that I showed earlier. It's kind of like a bad variation, basically. There's a lot of space in between. By the way, massive single print zone going down to 70 if this does continue. Any news on the uptrend? There was a headline about like Pakistan um and Iran speaking again. There was another headline about China and Russia agreeing not to sell weapons to Iran. So it's just like Iran stuff. Now, I don't know if that's what's causing it, but the timing lines up. Okay, starting to waterfall a little bit here, breaking all the trails up to the 4 hour. 4 hour trail is around 500. And then 8 hour trail is 525. So we're starting to recover all of those lower time frame trailing levels. I mean, today was just a great. It was just perfect that that happened because we were talking a lot about um, the different versions of like two directional markets and one directional markets and the different styles of how the price looks and how the indicators look. And then it gave you the just perfect side by side image of exactly what I'm talking about. So you had that two directional market right here, and then you shifted very heavily into that one directional market on that impulsive break around 11 o'clock. Okay, here come those single prints going back down to 70. Damn near this entire candle. If you see a lot of weakness up here, you're probably just filling in those single prints. If you see weakness below 70, that's a problem. But weakness going into 70, you don't really know. Could just be a single print move. But all right, guys, on that note, we're going to call it there. I think we covered a lot today. We're definitely going to make some shorts out of all the stuff that we talked about today, which you probably won't see for another few weeks because our backlog of shorts. But yeah, we'll definitely make some shorts from those things we talked about. Definitely a lot of good topics today. If you didn't see the stream, I'd go back and watch some of it. Talking about micro pullbacks, how to use the indicators, different playbooks, mean reversion style, more of a trending style, that sort of thing. But yeah, so follow our trade plan, guys. We are breaking out of the value of yesterday, which means we are trying to retrace that tail. So just keep an eye on those trade plan targets to the upside. We could see a small move down to fill in the single prints, but it could just be a single print fill in. We don't know just yet. You'll have to see how it stays below 70. Same thing on NASDAQ, but the big difference on NASDAQ is we are not breaking the value high of yesterday. We actually broke the value low, and we actually hit our bearish target, and now we are returning back into that value. So same thing, you want to see if we can hold above 518. If it can, then we're trying to retrace back into that higher value. But yeah, very different shapes, very different breakouts. Get a breakout to the downside on NASDAQ, breakout to the upside on ES. So a little bit weird there. But all right, guys, if you enjoy the stream, hit that like button. Be sure to subscribe. You can use code BREW on Apex. It's 90% off right now. And they brought back the legacy accounts if you guys want to grab some of those. I will start getting those receipts from you guys starting on Monday. So if you guys do use the code for any accounts, just hold on to those receipts. I will grab them from you next week to get you guys entered into the raffle. And then we will pull the raffle on the start of next month. But yeah, that's all I got. Enjoy your weekend, guys. I'll see you in Discord if you guys are in Discord for the rest of the day. If you're not in Discord, enjoy your weekend. I'll see you on Monday. Peace, everybody.